Here you go. This is called a March 1385 put in the money on that S&P 500. And that S&P 500, well, it's at 1370. Now, we do know with all the analysis and everything that we've done on that S&P is what I'm going to show people here is why I am wholesale. Let's start there. Okay? Now, last week, I'm going to go to the info tool and I'm going to tell you that these S&P 1385 puts went to the high up here of $40.60. They low from that point in this weekly chart, and I can show it on daily too now, because there'd be 5-day movement in here. But look at the high end of the range and look at where they closed. There isn't a lot of data other than I want you to see the clear ranges that when the same contract had a high of 49, we got down here to 15.87. And why are we removing risk? Yes, we've gone over the S&P monthly chart. That's called the S&P 500, which we already have all the analysis on that. So we really don't need to spend any more time on it, other than MMTs are going to learn how to make a market at a wholesale bid. We already know what the S&P is doing, but just as a quick reference here, then you can go back and look at the last couple of days analysis on the S&P, why it could go higher up here to these other trend lines, how it could get up there right below that 14 handle. So what we're taking a look at doing here is stealing this premium that had the high during last week and close is at 1587. Now, it's all about removing dollar capital risk. Oh, yes, it is. Now, if that S&P wants to go up a notch or two, we're not going to complain about that because we already have our lower bids, which is even lower than that close and that low with that big markdown from $40.60 right to my wholesale bid. It's all about getting that wholesale in that S&P 500 trend now. Key support and resistance levels, bull exhaustions, price exhaustions, everything that goes right in this whole thing about buying wholesale. When that S&P goes up, they're going to take more premium out of here. Yes, they will. So if you break up to that 1386 handle in the S&P, naturally that 1587 close is going to go down there, where I would be buying sets of 25 put contracts, and we line that lower bid, and it's about that S&P 500 trend and where it's going, why it's going to its resistance levels. But the king of it is that wholesale bid, that close 1587, and nobody going to be able to deny that because I'm taking out that dollar capital risk from 4060. And I'm even below the market at 1587. So I think I'm doing my job the right way. So if I'm going to make money on this S&P put option, and let it be known right now that removing that dollar cost capital risk is what puts you wholesale to the market, making a market right here now on that 1385 put. So we have the lower end. We are going to have a 5-day period starting on Monday, today's date, 3/11/2012, 10:25 a.m. Pacific Standard Time, and it's Car Racing Sunday here in Las Vegas. And once again, it's all about how to remove that capital risk in that turn. And if the S&P does gap up, we'll know in pre-market tomorrow morning we may have to buy higher. But once again, whatever the case is, we are at that wholesale bid. And we have removed a lot of that risk from $49 a contract over here now. There isn't a lot of open interest, as you can see, but there was volume that came in during this last week. And what I want to show people is to set those price alarms below the market and learn how to trade S&P 500 index put options That is what I'm saying. And how to get it wholesale and remove dollar capital risk and trade the S&P 500.